Hey everyone, welcome back to Calvin Mateo. I'm thrilled you're here because today we're diving into one of the most fascinating stock market paradoxes I've seen in a long time. There's a technology company out there that has just announced a massive $300 million share buyback program, launched a brand new enterprise AI suite that's generating real enterprise validation, and secured a strategic partnership with a unicorn fintech platform processing over $3.3 billion in annual transactions. Yet somehow, despite all of these incredible catalysts, its stock is absolutely crashing. This is Rezolve AI, and the disconnect between what the fundamentals are screaming and what the market price is doing is so severe that it's created one of the most compelling opportunities I've seen all year. Before we break this down completely, if you believe in deep analysis that actually matters, smash that like button and subscribe to Calvin Mateo right now. We dig into these setups every single week. Now, let me set the scene for you. It's July 25th, 2026, and Rezolve AI is trading at a devastating $2.24. That's not just a small dip, that's hovering dangerously close to its 52-week low of $2.05. Let that sink in for a moment. Think about what that means. The company has just announced strategic partnerships with major institutional players. Management is signaling conviction by deploying $300 million in buybacks. Yet retail investors are panic selling at the worst possible time. The market is aggressively fading the news, creating one of the most severe dislocations between fundamentals and price that I have seen in years. When you look at that downward price action on the chart, it looks absolutely terrifying. It looks like the company is collapsing. It looks like everything is falling apart. But here's the critical insight that changes everything about this entire setup. Underneath that ugly chart, there's a hidden microstructure metric that tells a completely different story. Let me show you what's really happening beneath the surface, because this is where it gets interesting, because the underlying business is validating its technology at a massive scale right now. Just 4 days ago, on July 21st, Rezolve announced something that should have sent shockwaves through the market. They're embedding their AI commerce infrastructure directly into Zilch, a UK fintech giant that's serving nearly 6 million customers across its network. Let me be crystal clear about what this means. This isn't some speculative pilot program that might never work. This isn't a proof of concept that may or may not generate revenue. This is enterprise technology being integrated directly into billions of dollars in existing transaction flow. Zilch already has real customers, real volume, and real momentum. They process $3.3 billion annually. Now they're integrating Rezolve's AI infrastructure into that flow. That's massive. And management isn't just hoping things work out. They've weaponized a $300 million share repurchase mandate. That's a direct signal of internal conviction. Management is telling you loud and clear that they believe their current valuation is fundamentally misaligned with what their massive $360 million revenue target for 2026 is going to deliver. When we dig deeper into who's actually buying the stock, something fascinating emerges that retail investors are completely missing. It becomes very clear that the smart money is quietly absorbing all of this retail panic selling. Institutional ownership currently sits at roughly 28% of the company, and the big players are aggressively loading up at the absolute bottom. JPMorgan Chase recently boosted its holdings by over 120%. That's a massive increase. SBI Securities increased their position by a staggering 271%. These are not small moves. These are strategic accumulation patterns by the institutions that have the best research teams and the most resources. But here's the most fascinating data point that signals something powerful happening behind the scenes. Exactly 1 day before the massive Zilch partnership was announced to the public, an individual investor named Alejandro Gonzalez filed a disclosure revealing a massive 7.5% passive ownership stake in the company. That's sweeping up over 30 million shares at the absolute bottom. This impeccably timed accumulation, right when retail was panicking and selling, signals something powerful. This signals raw, unfiltered insider confidence. Someone with deep knowledge of what's coming next in the business was accumulating shares with conviction. Now here's where we have to check our optimism with some brutal financial reality, because there is a very real financial constraint keeping a lid on this stock price. Rezolve AI commands an incredibly rich price to sales multiple of 20.5 times. That's not cheap. That's a premium valuation that demands absolutely flawless execution from management. There's zero room for error here. The company currently operates with a current ratio of just 0.67, which means cash is tight right now. They're facing immediate liquidity constraints. This is exactly why agencies like Weiss Ratings have slapped a sell rating on the stock. This is their primary concern. The long-term viability of this company doesn't depend on whether the Zilch partnership is real. It depends on whether management can rapidly monetize these new partnerships to generate actual cash flow. They need to bridge the gap and hit that $360 million revenue target before they burn through their cash runway. It's a massive race against the clock. Management has bought themselves a window of opportunity with this buyback program, but that window is not infinite. But before you write this off as just another overvalued tech play with execution risk, there's something brewing in the derivatives market that could change everything. Look at this short interest data. A staggering 34.15% of the public float. We're talking about almost 36 million shares currently sold short by hedge funds and institutional short sellers betting against the company. The days to cover ratio is 2.6 days, which means if retail starts buying with any kind of volume, those short sellers will be forced to cover those positions quickly. This microstructure turns Rezolve AI into a highly compressed, coiled spring. It's like a loaded weapon ready to go off. If any sudden commercial traction hits, if Zilch integration starts showing real numbers, if the buyback program starts accelerating, those short sellers will be forced to buy back shares at market price. When they do, you're going to see violent short squeeze dynamics unfold. And we can see this exact battle being fought right now in the options market. Look at the July 31st expiration. That's the nearest term battlefield. The stock is pinned in a brutal channel between support and resistance. There's massive resistance at $2.50, fortified by nearly 3,000 put contracts and 2,500 call contracts. That's the options wall. That's where the big players are defending. Meanwhile, psychological support is being built near $2, backed by heavy call volume from retail hoping for a bounce. If price breaks above that 250 ceiling, the squeeze begins. That's when the buying acceleration happens. So what's all of this actually worth in terms of price targets? Wall Street consensus is shouting loud right now. Analysts are giving Rezolve a strong buy rating with an average 12-month price target of $10.50. That represents an explosive 391% upside from current levels. That's not a small move. That's the kind of move that could change portfolios. But let's get tactical right now. Let's talk about actionable entry and exit levels that you can actually use for the short-term speculative trader looking to play the squeeze dynamic. This is a highly asymmetric, high-reward setup. Your entry zone sits between $2.15 and $2.25. You're buying right above the historical support floor. That's where institutional accumulation is happening. Your hard stop loss, the one you cannot break without exiting, is $2.05. If it breaks the 52-week low, the thesis is technically broken. The setup no longer works, period. But if that defense holds strong, if institutions keep buying, your immediate squeeze target is $2.62. That perfectly aligns with the 50-day moving average. That's your first profit-taking level. For long-term investors, this is only a hold if you genuinely believe management will execute that $300 million buyback and flawlessly transition the Zilch partnership into actual cash flow generation. That's the bet you're making. You're betting on execution. You're betting that this team can turn partnerships into revenue. Now, here's my final verdict on exactly how to play this setup. Rezolve AI is a genuine paradox. The price action is completely decoupled from its fundamental enterprise validation. You have massive institutional accumulation happening on one side of the market. You have a $300 million defense wall protecting the downside. On the other side, you have a 34% short interest that primes the entire stock for an explosive move to the upside. This is the setup that creates transformational moves. This is the market dislocation that separates traders who succeed from traders who don't. The data is telling us something powerful here. I need to give you a critical financial disclaimer before we wrap up. Trading heavily shorted equities, particularly microcap technology companies with execution risk, involves significant risk of capital loss. This is not financial advice. Nothing I've shared here is financial advice. You need to do your own research. You need to understand your personal risk tolerance. You need to be honest about whether you can afford to lose your entire position. If you cannot afford to lose this money, you should not be trading this stock. That's not negotiable, but if you can manage your downside properly and strictly adhere to that $2.05 stop loss, Rezolve AI offers one of the most compelling risk-to-reward setups in the market this week. Keep your eyes on the volume. Watch that $2.50 options wall. Let the data guide your trade. Watch how this Zilch integration starts to perform. Watch the quarterly revenue numbers. Now, I want to know what you think about this. If Rezolve actually executes this Zilch integration and hits their $360 million revenue target in 2026, where do you think this stock will trade in 6 months? Will it hit that Wall Street target of 1050? Will it exceed it? Drop your price prediction in the comments below. I read every single comment, and I'm genuinely curious where you think this goes. Make sure you smash that like button if this deep dive analysis added value to your trading arsenal and your portfolio. And subscribe to Calvin Mateo for more of this kind of research that actually moves your portfolio and changes how you think about market opportunities. Thanks for watching, and I'll see you on the next trade.